Welcome everyone to the CFO Swinger Watch technical analysis video for the week of March 11th through 15th. With that, let's start off with the markets. So the S&P 500 last week essentially threw its first red flag right in our faces. Now, not just based off of last Friday's candlestick, we've also had the VIX, the volatility S&P 500 index, popping to the upside. And so far, from the last couple of months, well, since the entire year, the first start of this year, we've been making higher highs and higher lows. And this is particularly interesting because the S&P 500 has been making new all-time highs every single month. And it certainly feels like it's been every single month since this year has started, but the VIX here is certainly sending a clear warning sign that we've been talking about for the past couple of weeks. And so there is a probability and a chance that last week's pop to the upside on the VIX can be the final pop before we see a very quick rise to the upside as we've seen back in the middle of February. And so this could essentially start that pullback, that textbook pullback that I've been talking about and was talked about last week on the S&P 500 and the overall market. So on SPY here, if we were to assume that last Friday's price action was indeed the first red flag, then we got to take a look at the weekly time frame. And when we take a look at the weekly time frame, and if I just remove all of my technical analysis right there, we can clearly see that we have an indecisive candlestick on the weekly time frame. So this is a doji candlestick. And usually when we have a doji candlestick near all-time highs, or basically at the all-time high price range, that's usually telling us that, hey, maybe the bulls here are getting a little bit scared, right? And with the bullish group or sentiment getting larger and larger as we're seeing more of the bearish group converting into the bullish group, it may be time that the market may start to look to finally give us that rug pull for all those late bullish people. And so we tend to get these type of indecisive candlesticks where both groups are kind of, they don't know where things could go from here. And especially it's poignant and important to understand that for the bull side, if they're feeling that, they don't know where we're going to go from here, well, that's essentially a warning sign, right? Because we've been going up for 19 weeks, a total of 19 weeks since the October bottom. And so, even just with the volume in itself on the weekly time frame here, I would say that it's telling us that there could be more sellers coming in, but at the same time, it could be essentially just the huge amount of buyers in that group alone starting to sell their positions near this all-time high area for the S&P 500. So those are all the things that you need to keep in your head as we are going forward into this week, and especially into triple witching, and also obviously just overall into the end of the month. And of course, guys, if you guys have not read the market summary first, make sure you guys go back to the market summary before you watch this video, because I go a lot deeper into what you guys should be expecting this week. Okay, so the S&P 500 definitely still have my eyes on this 477.50 level. And plus, if I just retrace from last Friday's close, or just last week's close, and I go all the way back down to 477.50, we're still within that 5 to 7% percentage range for a textbook pullback. And again, I told you guys this last week, so make sure you guys watch last week's technical analysis video. All right, so everything is still the same based on what I'm currently thinking from last week. And if you are to see a continuous move to the downside this week, as we head into that triple witching as well, I could essentially start to see a retest of 510 and more around 510 to 509, that little tiny $1 price range. But if we start to see that 510 retest occurring, which I think would happen tomorrow, maybe even pre-market, we can continue to hold over 510, maybe bounce just a little bit, and then we start to consolidate. And as we near the end of this week and even near the end of the month, we should be seeing a further move to the downside until we reach this first gap up area that we have not yet filled in. And so I would say, by the end of this month, I would say SPY can be somewhere around 500 or 497, 498-ish. But I would think that the market makers will want to see this $500 level being pinned, and we continue to kind of consolidate around this huge whole number psychological level. So again, this is just my short-term to mid-term outlook. But for this week alone, I would say that if you do see a 510 retest, we should be seeing some sort of a small bounce, and then we can continue to move to the downside as we head into the end of the week and continuously move lower until we hit this gap up area that we have not yet filled in. All right. And so again, make sure you guys are always looking at the levels that I have up here on my daily time frame, and make sure you guys translate these levels into your own daily time frame charts for the S&P 500. All right. So with that, let's take a look at our first name. So SWKS. You guys should probably know why I have still kept this name from last week, because again, it looks phenomenal. And last week, we also ended up having a nice doji candlestick. However, this is what we call a bullish dragonfly doji candlestick. And why do we call that the dragonfly doji candlestick? Well, if you see right here, where the open and the close are essentially the same or very close to each other, gives us the quote-unquote head of that supposed dragonfly. Actually, that actually gives us the wings of the dragonfly. And then this bottom wick, this very long wick here, gives us the basically the long end of a dragonfly, if you guys haven't seen one before. And then the actual top wick tends to be the head of the dragonfly. And so that's the reason why we call it a dragonfly doji candlestick. But also, it's inherently bullish because of the fact that we have a very long bottom wick, which means that there was a lot of buyers that were able to come in throughout this week here, or last week, and keep the price to the upside. And that's essentially what we saw as the price continued to stick right underneath that weekly, very important, significant resistance level at 107.15. And so everything is still the same. And make sure you guys just go back to the newsletter and read what has slightly changed, especially the option contracts that we're looking at for this name this week. But overall, the entries, the stop losses, and the price targets are still the same. We're only looking for that perfect breakout over 107.50, but at the same time, if we do see a small pullback on this lagging semiconductor name, we should be able to see a nice bounce at that 105.10-ish level once more. Okay, but as long as we continue to stay over this micro wedge chart pattern, which is literally wedged into this macro wedge that we have here in the weekly time frame, we should be able to see a nice breakout over 107.50 and eventually retest this descending resistance trend line on this macro wedge chart pattern on the weekly, and also retest this 115.50 resistance level on the weekly time frame. All right, so again, nothing has really changed here, and again, because of the fact that we haven't really moved from last week. All right, so our second name here is A-Firm. So A-Firm here, I want to take a look at this on the weekly time frame as well, and we'll be doing this for the rest of the names. I want to kind of give you guys a little pace of change here on these technical analysis videos. But for A-Firm here, this weekly time frame, you guys should know that I've been following this ticker and this chart pattern for quite some time now. If you guys go back to my Twitter page or my X page, and if you guys scroll a little bit down, you guys will know that I have talked about this name back in, well, the very first week of February actually. So this one here has been really on my watch list for some time now because of the fact that it's, well, first of all, making a very textbook bull flag. So again, the initial impulse move up creates the flagpole of this bull flag, and then the current consolidation that we've been in for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks is the flag, and that consolidation is what creates this entire bull flag. And so for A firm here, we're at a critical point now, and I've also mentioned this in the newsletter as well, but the fact that we have seen the weekly 21 SMA finally catching up here and retesting with the price last week, and also the price also holding over the weekly 21 SMA gives us a lot of information on what we can expect into the short to midterm future. And again, why is this important? Well, whenever the price starts to really get tight and consolidate within or between the weekly 10 and the weekly 21 SMA, or just on any time frame, whenever you see the price getting stuck in between the 10 and the 21 SMAs, we start to, well, we actually need to expect an impending impulsive move, whether it be to the downside or to the upside. And in this case, we need to be expecting a impulsive breakout to the upside. And just last week we had a pretty nice range where we nearly touched and retested this weekly 10 SMA, and we came all the way back down to retest with the weekly 21 SMA as well. Now again, this is a really good sign because there is a potential for this name to really break to the upside and have a nice large move to the upside. And also, you can consider A firm to be quote-unquote lagging because it hasn't participated with the rest of its peers or the overall market, where it has seen continuous moves to the all-time high price levels that we've seen so far. And so A firm here has also created a nice dragonfly doji candlestick on the weekly. And so if we're able to see a continuation of A firm to the upside next week, we need to be able to break over last week's high, and last week's highs was at 39.96, and that's the reason why I have created or given you guys a long entry over $41.20. This is the confirmed entry point from a longer term perspective. And also, if you guys are wondering why I haven't chosen $40, well, because if we do decide to come over this 39.96 previous high from last week, we'll be retesting this weekly 10 SMA, which I will presume that it has come down starting maybe even tomorrow, and probably even coinciding with this $40 whole number level. And so I do not want to get caught up in any type of selling that might come from the retest from this weekly 10 SMA. And so if you really want a longer term confirmed entry point, we need to be over this weekly 10 SMA, and we need to be over this descending resistance trend line. And by the time that we are over this $40 level or over the coinciding weekly 10 SMA, we should also be over this descending resistance trend line. And that's the reason why we had this 41.20 entry level to the long side. Okay, now if I go down on the daily time frame now, okay, we have an earlier entry point over 39.55. And why 39.55? Well, because we have a daily time frame level at this 39.50 resistance. So this is the whole number level at 39.50, and plus we have also seen a nice rejection on Friday where we attempted to break over this daily level at 39.50, but ultimately we failed and we came right back down below the daily 21 SMA. Now, to kind of give you guys a sense of parallelism, we also have the daily time frame price stuck right in between the daily 10 and the daily 21 SMA. So this further implies that we are about to see some sort of an impulsive breakout to the upside. And again, why am I biased to the upside? Well, based on the weekly time frame, we need to be. We have a nice textbook bull flag on our hands. And so on the daily time frame, definitely watch out for a breakout over this weekly 21 SMA, because if we do, then the daily 10 will eventually cross over to the upside the daily 21 SMA, and that essentially gives us a nice bullish crossover confirmation signal for a larger run up to the upside in the short to mid term. Okay, and so lastly, for price targets, if we do get a nice entry point this week, then expect to see the first profit target around $43, and then around 44.20, and then around to 48, this major resistance level. Now, I'm not going to expect much after we retest 48, but in the event that we do see a further upside move over 48, just like what we saw on early February here, we might be able to see the first retest of this 56 level. And this 56 level, if I go on the weekly time frame, is a part of a huge supply area or supply range that extends all the way up to 71.50. So again, there's a lot of overhead resistance is what I'm trying to say here. So A-firm has a lot of overhead supply that needs to be overtaken, but it won't be easily overtaken as well. So make sure to watch out for the shorts. Okay, so the next one here is ENPH. So this is the very popular and leading solar stocks. And ENPH has really caught my eye this week because on the weekly time frame, we have been basing quite well. And as we've been basing, we've been making a pretty nice trend of higher lows. And so, as we're making these higher lows, we're now sticking and staying over the weekly 10 and the weekly 21 SMA. But at the same time, we are seeing the weekly 50 SMA coming back down and is now officially caught up to the price. And now, if you guys remember, in 2022, I've talked a lot about the weekly 50 SMA on a lot of names, and especially for the overall markets on the S&P 500. And I told you guys why for really just literally all of 2022 as the reason the weekly 50 SMA tends to be a huge area of resistance and an easy area for shorts to come in and push the price lower. And in fact, we don't even need to see a retest of the weekly 50 SMA. The entire kind of enclosed circle-ish area that this weekly 50 SMA kind of brings along with it tends to be enough where we start to see the price getting smacked down before we even see any type of an actual retest on this weekly 50 SMA. And last week was a clear demonstration of that. And so again, just like with the overall markets, ENPH also ended up with a very nice indecisive doji candlestick, right? And so now, apologies about the flickering on the screen, but that's just because TradingView, I don't know what happened, but it's updated and it's now currently and constantly reloading. And I don't know if that's because of the ads here, but hey, it is what it is, right? So ENPH definitely is looking pretty bullish here, just based on the fact that we've been consolidating for the past 4 weeks, including last week, over this weekly 10 SMA. Now, what I really want to see is the 10 SMA curling up higher now instead of flattening and kind of moving down, but also I will want to see the weekly 21 SMA curling up higher as well, and not just slowly moving upwards, but at the same time kind of flatlining as well. So we need to see a bit more character to both of these two weekly SMAs, the 10 and the 21. We need to see a bit more curvature on the weekly 10 and the weekly 21 SMA. And so for ENPH, I would say that if you're able to see a retest of 129, which is kind of this this resistance level here on the weekly time frame, but now a new support level since the price is staying over it as seen from last week's closing price at 130.28. If you do see a retest at 129, we can see a potentially nice bounce at 129.10, and that will give us a very earlier but riskier, okay, but again, earlier also means risky, right? So don't forget that, guys. Just because you have an earlier entry point does not mean that you are sitting at a great position. It also means that you're taking in more risks. Okay, and that's the reason why I always say, even if it's an earlier entry point, it's riskier. And so this 129.10 long entry will be a great early and riskier entry point to the upside. Now, on the weekly time frame here, I just want to add this as well. If you do see a bounce at 129, I would most likely think realistically that the price will most likely not try to immediately move away from 129, and in fact, it might just kind of consolidate and tightly move over and under it constantly, and just oscillate between the 129 level, because again, the weekly 10 is not curling up yet. There's no curvature yet to the end here, and also the weekly 21 SMA has flatlined. So, as long as we start to see some sort of a curvature, then I would expect to see the price starting to move up higher. All right. Now, based on all of that information, if you go back on the daily time frame for ENPH, if we're able to, if you guys do not want to be able to involved, or if you guys don't want to be involved in the kind of consolidation, the oscillation that will most likely go on for this name, we can be seeing a nice long-term entry point over this 139 resistance level on the daily time frame. And so I wanted to keep it very simple and make sure that our long-term entry point is a confirmed entry point, which is the reason why I gave you guys a long entry point over 140.10. So that is our confirmed entry point to the long side. Now, obviously, there's another reason as well, but I'll only give you guys that one specific reason. So if you take a look at this candlestick here from, December 26th on Tuesday, the high of this candlestick was at 139.65. And if you round up, that becomes 140. And why would I want to round up? Well, if you're able to break over this previous pivot high point, then that means that for the meantime, for the last 3 months or so worth of price action will be breaking finally to the upside. Because so far, after making this pivot high point, we haven't been able to break over this 139.65. And we've currently just made 2 lower pivot high points. One right here, and then the other one was last Friday. So if we are able to finally break over this previous pivot high point at 139.65, then we should be able to have a nice confirmed entry point over 140.10. Okay, and so if you're able to, get any entry points here, whether it be 140 or 129, I would say that our ideal price target will be 145.50 and eventually 156. Okay, so let me actually make this a little bit more defined here, 156. All right, now again, if you guys are a bit more, if you guys don't have the ability to hold on to trades for too long, and if you guys do decide to get an entry point at 129, if this name provides us with the opportunity, I would say that 139 or even 140 will be your ideal target, or even just last Friday's high of 135.40. That will eventually even just be a very good entry price target for any type of day trading or even scalps, because this name tends to move a lot, especially if it starts to trend one way, right? So that is ENPH for you guys. Now, last but not least, we have Fizz. Okay, so let me actually go on the monthly time frame for this name because of this chart pattern. So every single candlestick that you guys see here is a month's worth, one single month's worth of price action and trend. And so far, this name has not moved either to the upside or to the downside for, I would say, almost 3 years now. And after this really crazy move up from January of 2021, and then this crazy move back down in February of 2021, this name has been tightly locked to, I would say, around 41.50 to 58. And the reason why I'm now really interested in this name currently is that we've been making this really macro large wedge chart pattern, and it really reminds me of our first name here, SWKS, for this week. And Fizz here though has been making this wedge chart pattern for over a year. All right, so not just the fact that it's been consolidating for almost 3 years since 2021, but it's been making this macro wedge chart pattern for over a year. And so this is a really long consolidation phase, and one of the longest consolidation phases that I've seen other than GoDaddy. Right? And if you guys don't know what the ticker symbol is for that one, look at GDDY. Okay, look up GDDY, and you guys will see the reason why I would want to be looking at Fizz. So Fizz here, again, if you guys like the beverages that they make, for example, LaCroix, the sparkling water, it's very, very good. I have it at least 3 times a week. This company has been really just hasn't made any progress. And I want to see some sort of a very good price action or break to the upside, even though I do know that this wedge chart pattern is neutral, which means that it can provide a break to the upside or break to the downside. So, the only reason why I have a bias is that, first of all, I like and really love their drinks, their carbonated water, their sparkling water. And number 2, this one has been consolidating for 3 years. All right. And I would believe that, based on what I saw on GDDY, GoDaddy, I can expect to see a very large impulsive breakout that can last for a couple of months, or maybe even just realistically a couple of weeks. And I would want to be able to capitalize on such opportunity. So with that, once I go down to the weekly time frame, last week we had earnings on Fizz, and if we take a look here, they did not have a double beat, but they did have an earnings surprise, but they did not ultimately quote unquote break over the revenue estimates. However, on the weekly time frame, we have a pretty nice long bottom wick here, and this is really interesting to look at because the price was able to push up higher until we closed over the weekly 10, the weekly 21, the weekly 50, and also the weekly 200 SMA. And even just in the weekly time frame, all of my major SMAs, the 10, 21, and the 50, are tied together. Right? So they're now officially coiled, which means at some point we need to see a breakout in the price so that these moving averages are now going to be uncoiled. And we tend to see that when we start to see very, very large breakouts that are very, very quick to the upside. And again, obviously to the downside as well, but we're trying to play this to the upside, and we have a bias to the upside. So as long as Fizz continues to stay over this weekly 200 SMA as it has been for the past over a year, and also all the way back in 2021, so during the entire consolidation phase here, we can see a potential break to the upside, a very monstrous breakout to the upside once you're able to break over this descending resistance trend line that is a part of this macro wedge chart pattern. And so if you now go back down to the daily time frame, okay, we can see a potential early entry point this week over $50. And again, this is an early and riskier entry point because I'm just playing a psychological whole number level, $50. It's right in between 0 and 100, right? It's right in between the single digit number and the triple digit number. $50 is right in between, and right, I guess, half of 100. So this $50 level is purely arbitrary, but it can potentially provide us with a very nice entry point, a nice mark, a nice halfway point to that $100 triple digit number, or even just the halfway point all the way down to 0, which we do not want to see happen. But on the daily time frame, we are clearly able to see what happened on Friday as it reacted to the earnings report on Thursday night. And so I love the fact that we were able to see a very nice big move and bidding up higher by the buyers before this closing price here of 49.84, and it really gave us a very nice long wick at the bottom, which would potentially continue tomorrow, which would allow us to get that early entry point at $50 or 50.10. And so if you guys don't want to be involved in any type of consolidation or any type of the oscillations or any type of volatility that you might experience as the price continues to sit and stay within the parameters set up by these two macro descending resistance trend line and this ascending support trend line, you can simply get a nice long-term entry point over this weekly and monthly resistance level at $54. So if you guys want to potentially get that very monstrous break to the upside, your perfect entry point will be over $54.10. And so, for profit target wise, if you decide to get $50 this week, and if the price does work out in our favor just this week, I would say you can start shaving off profits at 51, 52, 53. But again, if you guys want to keep it simple, and if you guys want to have some patience, Fizz, you guys can take at least half off of the initial position, around $54, especially if you guys decide to get an entry point at $50. Again, it's an earlier but riskier entry point. Now, for anyone who decides to start their first position on Fizz at 54.10, then your first profit target point will be $58. So this is a very, very, I guess I would say an area of hard supply here, since we've seen very, very quick rejections to the downside over here, over here, over here, over here, and over here. So there's a lot of examples in the past here where we saw the price retesting or relatively staying right at this resistance level and being immediately smacked down back to the downside. And so this will be a pretty good target to at least unload a third or even your half of your principal position. And ultimately, ideally, I would want to see Fizz going all the way up to the previous pivot high point of $64.50. All right, so hopefully we're able to see that monstrous breakout to the upside, even though this is not really a blue sky breakout, but it should be a pretty good breakout after years and years of consolidation. All right. Okay, so that is it for this video. Make sure you guys smash that thumbs up down below if you found this video applicable, and make sure you click that subscribe button down below as well if you aren't subscribed yet. But most importantly, click on the notification bell to know when I am live or when I have simply just uploaded a new video. Good luck, and I'll see you guys all tomorrow morning.